Hey, everybody, this is Mike Johnson. I'm your host, and this is the Success Estate Podcast. Thank you so much for joining. This is episode number 3. We have a great guest today who's going to help you in some of your home buying desires. We're going to answer some questions about a particular loan today that's very helpful for a lot of people. Thank you so much for following along. If you have been following along, like I said, this is the 3rd episode. The first 2 episodes were basically like an intro for me. And then also, too, you get a chance to see my beautiful wife. Go back and check out those episodes if you haven't already. They're very insightful as to who I am and why this is important and why this podcast is actually started. This podcast is for anybody that wants to be confident in buying, selling, investing, and especially owning your home. All those 4 areas are very important to me, and I believe that information provides confidence, and confidence helps you to make the best decisions. Today, I've got my brother on with me today. Go ahead and I'm going to type your name in the title, but you pronounce your name the way you want people to pronounce your name.
Right on. All right. So, hi everybody out there. My name is Ke'von Ware. I'm here with the Mortgage House here in Tyler, Texas. Just happy to be here on today. So, I mean, everybody can probably call me what they want. I get KeVon, I get KeVon, I get Kevin, whatever's easiest for you. You call me K if you want to.
Right. And I have a question to make first and foremost, man, that I actually got your name saved in my phone, KeVon. And I've been knowing that I need to change. I think I did that initially, and then like I got you like KeVon Stage. I don't know if you.
I know you're talking about.
Got you in there more like KeVon Stage instead of how you were named. So I apologize for that.
That's all good.
But yeah, my brother here, Ke'von, where we met at UT Tyler. He actually went to school at UT Tyler, graduated with a bachelor's degree in business and marketing in 2016. Shortly after, started in the mortgage industry and in 2017. We met primarily though playing ball, and we've had a lot of battles, and I appreciate that. Anybody that I battle with, I respect. So now into this game, this is just a different game. We're still trying to do the same thing. So, man, I really appreciate you coming on. And anything you want to add to the person that you are, that from the description that I just gave? I know you're from Fort Worth. I don't want to leave that out either.
I just gonna say that's about the only thing. I'm from Fort Worth originally, guys. You know, I moved down here to the East Texas area, but hey, I've been out here ever since 2011. So it's my second home.
That's what's up. Married man, right?
Yes, sir. I am married. Yes, sir. Yes, sir. Almost for 2 years now. So
2 years.
Yes, sir.
I got to meet your lovely wife actually at a seminar. So let me say first and foremost, KeVon has been, man, since I contacted him the first time about starting on some of these things. I get a lot of harebrained ideas that I try to go for. The seminar, we actually did a seminar at one of the local churches here, and my brother came down and dropped a ton of knowledge for us that day. So, man, I just appreciate everything that you've been doing to pitch in and help get these people the information that they need. So, man, appreciate everything you're doing. As a matter of fact, I believe brother's got several videos that you can go back and check out on his Facebook. He did his Mortgage Monday spots, and tons and tons and tons of great information there for you to go back and check out. With that being said, we'll get started, man. We'll jump right into it. Like I said, we're going to be on for just a little. We'll be before you just for a little while, and then we'll get out of y'all's ear. But today we're talking about FHA loans, right? And there's a lot of misconceptions about FHA loans, but it's utilized a whole lot. I would probably say, I don't know, maybe I'm not on the finance side. I think probably more than anything, FHA loans are used in order to get people into houses. With that being said, you need information about that in order to, utilize that correctly, to even know if it's the best thing for you. So today, KeVon is going to drop a ton of knowledge on us concerning some questions that are frequently asked about FHA loans. So, bro, why don't you start off first of all with what an FHA loan is?
Okay. My apologies, y'all, if y'all heard any dogs bark. I'm in my office and we keep puppies in the office in my boss.
answer, and I guess I should say it every time. You know, in the pandemic, I work from home. I'm at the office just so happened today. Most time I'm at home. Be prepared to see kids, animals,
Man.
whatever. Be prepared. It's real nice, so I hope people are okay, and if not, you'll be okay.
Most definitely, most definitely. But you were saying like, can you ask that question for me one more time, just so I can make sure I reiterate?
What is an FHA loan?
You say that one more time. I couldn't hear it.
What is an FHA loan?
Okay, so my bad. Okay, I got you. So FHA loan it's a government loan whenever it comes to the financing side. Basically, it's government backed. So it's like you were kind of saying, to piggyback off of what you were saying, like about 90% of people go with the FHA loan on their first time purchasing a home. The reason being is that it's one of the most lenient programs that you can probably get into, basically, meaning that it's lenient not only on the credit side, but also on the down payment side. So FHA, like I know a lot of people may have done a little research whenever they see like, what credit score do you need to get a home? You might see a 580. Of course, before the pandemic, it was a 580, and that was a FHA loan, meaning that basically FHA, that particular loan program allows you to go to have a little bit lesser of a credit score and still get you in a home. And then also the down payment, like I was stating, it's only 3.5%. Technically, that's one of the lowest down payments that you can go as far as that, because normally, you know, when you go to other programs, it's, you know, a little bit higher down payment, but FHA is only a 3.5% down payment off of whatever the sales price will be. So that's kind of what FHA loan is in a nutshell. It's a government backed loan.
Got you. And I think that provides for the lender. The lender side provides some protections as well, right? So it kind of it's a win-win for all parties because it creates access to homes for the everyday person if they decide they want to leave the nest, if they with moms, or if they want to get out of a lease and own something for themselves. Kind of knocks down some of those barriers because, you know, unfortunately we make mistakes, you know, and your mistakes shouldn't keep you from being able to start to create something for yourself. So I think I think these loans, from my understanding, these loans are created in order to create an avenue and access for people that may not have the strongest of credit scores, because credit is hard to build. I mean, I once you knock down, it's a grind to get it back up, you know, where you probably want it to be. But, you know, in the meantime, housing is foundational, it's important. So it seems like these loans have been created to help in that regard. As far as you've already covered that it's lower credit score, more lenient. Let me not say lower. It's more lenient on the credit score side. And then also, too, there's less of a down payment. Is it a first-time home buyer loan, though?
So to answer that question, because I get that question a lot.
Get that a lot.
Look, see, I was going to say, but technically it's not. So you don't have to be a first-time home buyer to qualify for FHA loan. Typically, what we see is a lot of first-time home buyers, they go that particular route due to the fact of like what you just said, to piggyback off of it. It's just, you know, maybe mistakes happen in your past. We all are human, so we all make mistakes. So maybe it could be your credit score wise. It could be sometimes not even credit score. You know, sometimes also with the leniency of FHA, it's also what we call DTI, or so your debt to income ratio. I know that's probably foreign terms, but basically what that is how much money you have coming in versus how much you have going out towards monthly debts. So with the FHA loan, it's the most lenient in that regard, meaning that you can go up a lot higher in the percentage than you could with other loan programs. Other loan programs are a lot less, like they won't allow you to go over a 45% or whatever DTI, whatever the case may be. FHA, you can go, depending on credit score, you can go up to about a 55%. So it's more lenient in that aspect.
That's actually educational for me, because I've actually been telling a lot of people, you know, I know it's different for every loan. And I thought I had read 43% or something like 43, 45%. I didn't realize that you could possibly, I guess in the right scenarios, could even go a little bit higher than that. I guess, does that probably have something to do with the type of debt that you have?
It depends. So basically, I don't want to go into other loans, but like the 43% that you're thinking about or that you're speaking about, that's more so for like USDA. USDA is super strict. You can't go over 43%. With the conventional, you don't want to go over 45%. You could probably go up maybe a couple more percentage points, but that's neither here nor there. But FHA is typically about 50%, but depending on credit score, you can go up and stretch it to about 55%. As long as it can run through the automated underwriting system. So
we actually kind of transition into the next question, which is what are the requirements? So, the credit score you've already covered, the debt to income ratio is already covered. Are there any other things that are requirements, any other things that people need to start preparing for when it comes to those?
Got you. When it comes to that, so I'm just go over them just to reiterate it. So like you said, credit, right now, it went up during the pandemic to like a 620. Some lenders was like a 640 from the 580. Oh. That's what I was saying. So it shot up on us. But right now, the word is kind of getting more adjusted, and I'm not gonna say used to, but it's more. It's beginning to get more adjusted to living with COVID, basically. So now a lot of the lenders are loosening up their restrictions, and they're starting to kind of, you see them going back down a little bit. So right now, with my particular company, we can get you a FHA loan for as low as a 600 credit score. So a 600 credit score is the requirement. So 600 credit score, DTI, of course. It just depends. You have to be within a 55 regardless to get any type of loan. So you want to keep that, a little bit on the lower end, which is what we will calculate for you. So it's not something that you have to think of on your own. We do that for you. And then also too, trying to think of another requirement. Really not much. Like I said, it's just 3.5% down. But it's not too much of a requirement other than that. Now some restrictions. I can't hear you. My bad, Mike. Go ahead.
Have those funds in your account when you apply, so that 3.5%. Do you have to? For one, of course, a person doesn't know how much they're going to purchase. Would you have any suggestions on what you should be able to show, either in assets that you have or assets that you can access?
That's difficult because every file is different. But I do get what you're saying. If just coming into a home buying process, period, I just tell my people, you always want to have something saved. You want to have a decent amount enough saved for at least a down payment. Because I know a lot of people kind of overthink closing costs, of course. That's typical. But you want to at least have your down payment, and you know that you have that in your account. So a down payment, like I said, it could be 3.5%. So if you already kind of got a mindset before you even get pre-approved on how much home you want to, purchase, because I know people, we are creatures of habit. We look before we even pre-approve.
They're scrolling.
So it's like this. So
please stop before you get your dreams down.
See, I say that same thing, but it's okay to dream. It's okay to look. So if you already are looking at those particular, okay, if I know I got to go FHA, if I'm fitting into this criteria of I'm possibly going to have to select this loan program or go with this particular loan program, you want to already have in your mind, okay, I got to get 3.5% of whatever they're asking for.
Yeah.
So if you keep that in your mind, that'll be a good, starting point. So basically, of course, some thousands in your account is going to be ideal. I can't tell you how much, but
several G's should be expected at least.
Correct. Several G's. I was going to say that, but I just, but you definitely want to have some saved as far as that.
And I try to tell everybody, there are several things that I feel get left out of the conversation a lot of times. And for one, like I said, this podcast is especially about confidence. Mm-hmm. You also need to come to the table with some information, as far as like what your monthly budget is, how much can you actually save? All those things should affect the kind of house that you pursue. I look up, there's a lot of, especially, the value of homes is going up now. These $300,000 houses are looking beautiful around here. But, what I can access in funds and then what I also can afford monthly you know, is
It's gonna,
important. Now, debt to income, what is that? That income is which part of the income? Are you looking at a monthly or are you looking at the year? Give us some insight on that
okay,
income.
so the debt to income portion, like you said, whenever we doing the typical application, I'm going to ask this question. I'm going to say, hey, what's your gross monthly income? Meaning how much money you make before any taxes or insurance or anything like that is taken out of your check monthly. Most of the time, a lot of people may not know off the top of their head because maybe they don't get paid monthly, or they just not thinking about that. All they thinking about is what they're netting, not what they're
Right.
gross. So
Right.
basically what that looks like is we can do the annual. So like if you're on salary, that's a lot easier. All you gotta do is just tell me what your annual salary is. I just divide it by 12.
Right.
If you're hourly, I just multiply your hourly rate by how many hours you typically work a week. So if you're full-time, hopefully you're 40 hours. Sometimes it could be 38 or whatever. But I multiply by that amount of hours that you get weekly. And then once I get that number, I multiply that by 52, which is, a whole year. Then I divide that by 12. And then that
Gotcha.
gives me your monthly.
Gotcha.
So that's kind of how we look at it, if that makes sense.
Now, can people just go on like Credit Karma or something like? I'm not a big fan of Credit Karma, you know, except for to, you know, review what
Correct.
people are reporting in credit. Is that an accurate way to go and see their debts though, and compare that to what they have in income?
It is. So I agree with you 1000%. As far as I'm not a big person with Credit Karma, I do have it myself, and I tell people to get it. One being the reason, like you just said, you're able to monitor what's on your credit report and what shows up. And then also, two, of course, it gives you a range of where your score is. It's not accurate, people. I'm gonna say that again. It's not accurate, but it's a range. And then not only that, though, like you said, yes, it can help you out with what your monthly debt to income ratio would look like. But the thing is, when it comes to debts, certain things that we count that people don't really understand, like, so for instance, we don't look at how much your rent is. Like, I know a lot of people are like, well, I rent this and my car insurance is this, and then my insurance is, we don't really care about all that, to be honest with you. The main things that we look at for a debt to income ratio is, one, we look at your car note. So we do look at a car note. We look at your credit cards. And on credit cards, we're not looking at the balance. Like if you got $1,000, $2,000 balance, we only care about the minimum monthly payment. So if it's only $25 a month, that's all we care about.
Yeah.
So we look at that, credit cards, and then we also look at student loans, personal loans, and then like tax debts. So stuff like that.
The medical bills, are they considered? Do you know if they're considered?
They are not. So the thing is with medical debt. So whenever we pull credit and we get deeper into it, we would actually pull credit. We do not consider medical debt in the mortgage field. So it's not hurting you on our end as far as in your debt to income ratio. Not to say it doesn't affect your credit score, because it does.
Right. So you can't just all the way escape it.
Exactly.
And I mean, listen, I know medical bills are really kind of a thing. I mean, for one, I got 3 kids, all of them under 5. Those bills they stack quickly, you know. But I know that also too, you know, you have to find ways to to be able to still accomplish your goals. So that's really important, and I really appreciate you breaking that down. I didn't have those questions planned, but as we were talking about it, really seemed like that's something that we probably need to discuss, because I know that there's a lot of times. So what I'll get a lot of times, people ask me, and y'all may hear yourself, you may have asked this to me before. Hey, my credit score is like at a 700. How much house can I afford?
They ask that all the time. Credit score has nothing to do with how much house you can afford.
No, it doesn't. It doesn't. And I mean, and you realize like there's a lot of information that's been passed from person to person, almost like a rumor. And that information just gets all jumbled up. And because people aren't in that field, or they don't deal with this every day, they kind of get some misinformation. That may not be intentional or anything like that, but it's still misinformation that, I see a lot of people start putting effort towards things that actually don't help. Like I don't know. Does it? From my understanding, it doesn't always help to just go and pay off if you've got the cash to just go pay off every credit that you
That's a
bill.
fact.
You
That's a
know,
fact. So are you saying every credit period, like
right?
credit
Like
card?
every debt. Like if you just go, hey, I'm just gonna go. I've got a personal loan. I'm gonna go drop my 2,500 to get it off. Like from my understanding, that's not always helpful.
That is correct. So you are absolutely correct in that case. I'm not a credit expert by any means, so don't quote me on it. But what I'm saying is, I've definitely I've definitely seen it though. I've been in this now for like almost 5 years. But so I work with credit every day. But basically, what I'm saying is, what you said is absolutely correct. You don't want to just go and pay off all of your debts, because sometimes it actually affects you negatively. Um,
Mm-hmm.
because of the simple fact of, when you're just paying it each month and then it's a continual span of you paying it on time, that shows and that reflects as positive credit. And it's showing like, hey, this person pays on time each month,
Right.
consistently, rather than
Right.
you sitting here and you take that whole balance and you just go pay it off. And then it could report negatively. It could drop your score a couple points because you
That's
did.
they may think, hey, you just got your tax returns, you went and just dropped. You don't have this money coming in all the time.
True.
There's no way to. Well, I guess unless you can prove that you got that money coming in. Now, as far as with FHA loan, can
Mhm.
you be 1099 and get an FHA loan?
Can you
Can
be
you?
1099?
Yeah. Can you instead of W-2s, can you be a self-employed or independent contractor and get an FHA loan?
You can. It's a little bit more tedious though, but you definitely can. I mean, of course, when you 1099 or if you self-employed, you have to verify, tax returns for the last 2 years, and we have to take an average of your income, things like that. But you definitely can.
Gotcha. Now, with on the other side of it, with the W-2s, if you have, how long do you have to be employed before you can get approved for a mortgage?
So to answer that question, basically, we always look for a 2-year work history, and that's complete 2-year work history. Not saying you have to be at that same job for 2 years. We just need a complete. You could have worked at McDonald's in high school, and then now you just graduated college, and then now you have a full-time job. As long as we got a 2-year history of you working, sometimes we can also count. Excuse me, my apologies. Sometimes we can also count education as well as employment. For
Really?
2 year. Yeah, we can. So, like, let's say,
An engineering degree, they like, hey, you.
see, that's what I'm saying. So sometimes, like for instance, if you were in college, right, and then now you just got out of college, freshly out of college, and you got right into a brand new job in your career field, we can count your years of school as work history, because basically you were preparing yourself for your job that you got now.
Got you.
So
Got you.
yeah, but we just need a 2-year history, just period. But as far as, like, let's say you just got a job, and of course your W-2, you hourly or whatever the case may be, we can use that income. You don't have to
Yeah.
wait a certain amount of time as far as that.
Okay. Let's say you got another house. You already own a home. You want to
Mhm.
buy another house, though. You want to upgrade or you want to downsize or whatever.
Mhm.
And that was a previous FHA loan. Do you
Gotcha.
have? Can you use that FHA loan, another FHA loan, to purchase the new one?
You can't. You can only have one FHA loan out at once. That's the thing about the government loan. Now you can do that with conventional. I know that's another segment, but yeah,
Right.
with FHA you can only have one out at one particular time.
Got you.
Mhm.
As far as let's say somebody's had trouble in the past, foreclosure, bankruptcy, is there any coming back for that with the FHA loan?
It is. So you can, as far as the bankruptcies go, I know it's chapter 7, chapter 13, as far as that, but chapter 7, I want to say, yeah, chapter 7 is 2 years. So you got to wait 2 years from your discharge date. So
Got you. Okay.
it's not when it was filed, because a lot of people get that misconstrued. It's not when you filed it, it's when it was discharged. So it's
Important.
2 years from the discharge date. Now, sometimes it got different, guidelines to where you can probably finesse it, and it could be within 12 months, so within a year. But you have to talk with your bankruptcy court and all that type of, stuff to make sure that they approve you for that, because sometimes they will not. Now, if it's a chapter 13, which is where you paying back, you making payments on whatever it is, they just consolidated it. Now that's 12 months. But like I said, that's also, you have to talk to them about it to confirm it, if they'll let you do it within that 12 months. And just, confirm that they'll allow you to get a mortgage.
Got you. Got you. Man, you've answered a ton of questions today. We're getting close to our time. Big question.
Mhm.
How can a person find out if they qualify for an FHA loan?
Well, they could call their local lender. You can call myself if you like to. I definitely, be more than happy to assist anybody, with just questions. If you don't feel comfortable taking the app, questions. That's a start, and then of course just seeing where you are. But you could definitely reach out to your local lender, reach out to myself. I'll probably be getting you over my information as far as that, but you can reach me at 817-408-0143. You can shoot me a text. That is my cell number. You can call me, whatever the case may be, and then we could just talk about it, and we can help you out from there.
Hit him on the hip,
That's the same way.
like the whole song. You can hit him on the hip. He still got a paper probably.
Yeah,
Hit him on the hip like they used to with the beeper,
man,
and he'll get back to you if he's busy out here making all this money out here. But
man.
But man, hey, I really appreciate all the information you've educated me. I tell people all the time, it's very important. The go-to person first is the real estate agent, in my opinion.
Mhm.
But it also would not hurt at all to start with a lender. And when he says local lender, so you can serve any. Can you go serve people from Louisiana, Oklahoma?
So
What's
the
your
way that my particular thing works is I'm licensed in the state of Texas. So all over the state of Texas, no matter where you are, I can help you. Now, if you need assistance with finding a local lender in those other, towns, I could probably help you out with that as well. I do have connects. My boss is well known and she knows a lot of different people. So I could reach out to her. Maybe she knows somebody in that specific area to where we can get you, pointed in the right direction. But definitely reach out to your local lender, talk with them. Me personally, I prefer somebody that's close, that's tangible, that I can throw a pin at if I need to, or I can actually see.
Why do you prefer that?
I prefer that because of like when you talk to these people that are, for instance, no knock on nobody else, but we in Texas right now. I mean, Texas to me is the best state, but I ain't gonna get into that. But we in Texas. But if you're talking to somebody that's in a different state about Texas, it's totally different because Texas have different guidelines. Every state has different guidelines when it comes to mortgage and when it comes to, just different things. So they might not be as knowledgeable, not saying that they don't know what they're talking about, but they might not be as knowledgeable on guidelines in Texas as they are wherever they are. So they could tell you some things and it might not be wrong to the certain extent, but it could be wrong for Texas. If that
Speaking of
makes
guidelines, real quick, let me add this in.
sense.
A question that I got recently. If a person is going through a divorce,
Mhm.
what do they have to have in order to get that FHA loan? Because with FHA, if you're married, both couples have to report
Correct.
their correct. But let's say things start to splinter a little bit.
Mhm.
What should a person do if they're considering getting a divorce or if they're in the process of getting a divorce?
Okay, I'm gonna let people know this right now. In the state of Texas, especially, we all know this. It's a community property state. So,
Mhm.
meaning technically, if you married on paper and you did the marriage license and you signed it, or if you say you're married or you're claiming to be not claiming, don't say that. If you're saying you're married on your tax returns and you got the same last name or y'all putting joint or filing married, you're considered married in the state of Texas. So
Gotcha.
basically, what I'm meaning by that is to answer your question. When you're doing an FHA loan, exactly what you said, we have to count both spouses' debts
Mm.
along inside of that particular application. So, for instance, if one person's credit score isn't up to where it needs to be at the time, but then the other person's is, and they're like, okay, well, we want to move forward, that's perfectly fine. But we can only count the person's income, that credit score is above where it needs to be, but we still have to count the other spouse's debts that's not on there.
Wow.
So you got to keep that in mind. So basically, to answer your other question though, too, I just want to put that out there. But yeah, whenever you are in the process and it gets, shaky and you might be thinking about a divorce or you in the process of getting a divorce, you probably don't want to be going through the loan process right then and there. Can you still hear me, bro? Hello? Okay, there you go. You good?
My bad.
No, you good. We good?
Yeah. You
Okay.
said of getting a divorce.
Yeah, I said so. If you're in the process of getting a divorce, or if you are you thinking about it, whatever the case may be, you might not. While you are doing that, you want to get that finalized first. Put it that way. So if you are going to go ahead and get the divorce, you want to go ahead and get that finalized because the reason being is that like I said, Texas community property. So that other person or the other spouse, soon to be ex-spouse, whatever it's going to be, is going to have legal monetary ownership in that property, and they're going to have to sign paperwork at closing. So if you don't have contact with them, or if the relationship is rocky,
it'd be a spicy closing.
you see what I'm saying? It could get tedious.
Need to do it. Do they need to? So let's say they want to just see where they stand. Would it be good for them to apply? Let's say they're in the process of getting a divorce and they want to apply, see where they stand. Is it okay to just apply and then kind of take it from there, or do you just need to wait? Period.
No. You are absolutely correct. You always want to see where you stand. You always want to, if that's the route that you will be taking as far as that situation. But then on top of that, for a fact you want to purchase a house. Like you said, I'm 1000% agree with you. You definitely want to reach out and apply, see where you stand, all your ducks in a row basically beforehand, and then already on the backhand of that, be working on getting that situation settled in the hand. And then once that's over with, hey, we already got you taken care of over here. We already know you pre-approved. You're good. This is this. We're going to have the divorce decree to prove, like, hey, now it's final. And then we can move forward.
Got you. Well, hey, man, again, KeVon, bro, appreciate all the information, man.
Yes,
you just wisdom out on us today. We really appreciate all that. I think people should be able to at least feel confident enough to say, let me, as you said, get my ducks in a row and see if they are in a row. If they're not in a row, I've been working on a lot of different things and they're not, I'm still not lining up as I should. I just tell everybody, go apply. You heard me say this in the last episode, go apply, see what happens. You do take a little credit hit on your, people ask you all the time, well, will my credit get hit? Yes, anytime you inquire. But at the same time, the wealth of information that you receive, I personally feel, and I'm not a credit expert either, but I feel like the wealth of information you receive is worth finding out where you stand and spending those couple points. So, man, once again, appreciate it. Any final thoughts you want to give or anything like that?
Man, nothing much. Like you said, just if you guys are, thinking about it or whatever the case may be, like you said, just do it. Just apply. Just call somebody, call your local lender, whoever you're comfortable with, call them, talk with them, ask them questions, and just apply. You never know where you stand. You could be ready right now, but you're thinking that you're not ready. So it could be. So like you said, just call and apply, and that's what we're here for. We're here to answer any questions for you. Me and Mike.
Crazy low? Are the interest rates still low?
They are low, guys. I ain't gonna lie to you. They still are low. Now, the thing about it is rates are moving up. They are going back to kind of, the old standard. But the thing is, they're still extremely low. Think about maybe a couple years ago when rates was 5 in the 6s. So a 3 point something now that is not in the 2s. I know a lot of people wanted that too, but now that they're not in the 2s as much anymore, it's still a good rate.
Yep, definitely. Well, hey, man, appreciate it once again. Our time is spent now. Thank everybody for tuning in to this video, this podcast, whichever way you're watching, whichever way you are joining us. Please like, subscribe, share. Those things would be huge. And it's not for me. I tell everybody the same thing. I didn't get in this in order to just be this super wealthy, world-renowned agent. I just think it's housing is fundamental for everything. Housing, we all need a place to stay, and you might as well in that place that you're staying in. So if you found this information helpful, please like, subscribe, share. And if you have any suggestions or topics that you would like to hear in the coming weeks, then please drop that in the comments below. If you'd like to know more about FHA loans, or if you qualify for a loan, you can reach out to me, or you can feel free to reach out to KeVon. His information will also be in the caption for you to read and utilize. All right, y'all, thank you so much. This is our time, and we will be back next week with another segment of the Success Estate Podcast. Thank you very much, and have a good day.